The cryptocurrency market has seen an explosive rally upon the landmark victory with the XRP and SEC lawsuit. Will Bitcoin continue upwards, or is this move a fake out? How is a 4-year cycle looking, and when will be the next bull market? These are questions we'll answer in today's video. Let's dive in. Okay guys, welcome back to the channel. Thank you so much for tuning in. I hope you're all having a fantastic day today. Today we're going to be taking a look at the macro, the small time frame, and the midterm time frame, discussing the 4-year cycle, our next price predictions, and exactly what we expect to occur on the smaller time frame. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant news events. No hype, no emotion, no BS, pure raw TA. That is the kind of content you are interested in. Join us on Telegram. It is a second link down below. You'll get access to charts, updates, videos, educational posts, news events, everything you need to stay in the loop with Bitcoin, cryptocurrency, and the market as a whole. If you are interested in joining our VIP channel with over 600 members, you get access to exact trades with exact entries, exact targets, exact stop losses, with exact justification, and of course, our trading analysis. You'll get access to 20 plus trades per month. You'll get access to our group chats over here. We have 5 group chats where we teach you guys how to trade, we educate you guys, we develop your skills, and get you on the road to becoming proficient and profitable traders. If you're interested in joining that community, contact me via the pinned comment in the free channel and you'll find more information here. Let's go ahead and dive in, guys. So Bitcoin has seen an explosive rally toward the upside, a huge win for cryptocurrency, a huge win for Bitcoin upon the benchmark victory for XRP against SEC in the lawsuit. The judge did rule in favor of XRP, announcing that they do not deem XRP to be a security, and therefore that resulted in a strong move upwards for both Bitcoin and XRP, including a variety of other cryptocurrencies, altcoins in the market. Again, you can go ahead and read more about this. This was actually announced overnight in Australia time, so unfortunately I didn't get a chance to trade XRP, but I know a lot of people did. So if you did catch that, congratulations, it has been released. Now I do want to say this news is not a finalized result. There is still a chance for the SEC to appeal this, so we do have to keep that in mind moving forward. But all in all, it is looking fantastic for both XRP and for the cryptocurrency space. It is definitely a great win to have. Moving on there, we can see for July, we're up 3.14% now, with a massive surge in volume, 124% upwards to 155 billion. The largest amount of volume we have seen in the cryptocurrency space the entirety of July. Looking at liquidations, we are up 328%, sitting at 286 million. Insane stuff, guys. Absolutely wild to see. Moving on to those liquidations, we can see if we take a look at the breakdown, the majority of these liquidations did come from shorts, and we did have a whole bunch of long liquidations come in on the later half of yesterday. Again, more or less through these little drops. So again, shorts definitely did crop the end of that stick, the short end of the stick yesterday, with massive amounts of liquidations. If we see volatility rise, if we see volume rise, we generally see liquidations follow. When we're discussing the last few days that we've seen volatility compress, we're discussing the last few days that we've seen momentum compress and a huge move was coming. We discussed yesterday that the move toward the downside will be triggered upon the loss of 30,000 to 29.8k, and the move toward the upside would be triggered upon the breakout of 31,000 to 30,800. A massive move, guys, toward the upside and into our next resistance at 32,000 to 31,300. We'll be discussing what this means in today's video. But before we get into that, let's talk about the broader markets and the DXY. The DXY is on a moon mission to the downside. It is dropping through every bit of support. It is retesting. As we can see, we got rejected from this downtrending resistance right over here a couple days ago, losing our 102 support, losing our 101 support, moving down under 100 for the first time since we broke above it all the way back in April 2022. We are underneath 100 and moving into the 99.5 to 97 support range. Very, very bullish to the markets, very, very bearish over here for the DXY. Of course, if we continue to get bullish news for inflation, bullish news for PPI, bullish news for interest rates, the DXY will continue toward the downside. In fact, if we take a look at the next rate hike, which is going to be on the 26th of July, we can see the current probabilities are in favor of a small hike of 25 basis points, 7% in no change, and 0% on an ease. So it'll be very interesting to track how these probabilities shift and change, moving closer and closer to the date being 26. Moving on to the stock market, we can see a strong move above 4,500, but still retesting that uptrending resistance. We do need to invalidate this level and bust upwards to continue this move upward. Again, if we do manage to break upwards here, we're looking for these local top points, 4,600. We're looking even higher if we do continue upwards. Again, if we take a look at the overall trajectory of the stock market in comparison to the DXY, we can see the moment we kind of topped out over here back in October, November 2022, we have seen the trend flip. And this is what I was talking about in the other video. The correlation between these assets on an intraday period may not be exact, but if you zoom out to a higher time frame, the correlation becomes stronger in the inverse. We do have a strong inverted correlation between these assets. If we take a look at Bitcoin, for example, one of the main reasons I flipped bullish down to 16.5K was because I noticed the perceived systematic risk in the market was falling as the expected trajectory of interest rates were moving downwards as a result of and as represented by the falling DXY. We saw a massive opportunity here to take some entries. We took entries down over here. We sold all the way up to 30,000. We're still looking for entries again. We'll discuss that in today's video. But overall, guys, phenomenal stuff. The market is doing excellent. Let's go ahead now and discuss what we expect. So we'll start on the macro charts today, guys. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. The 4-year cycle, I want to talk about the next price predictions. I want to talk about the technical indicators and what the charts are suggesting and where the price could historically go based on historical data. Then I want to jump into the smaller time frame charts and discuss exactly what is happening from a technical and structural perspective and what you should not only expect to occur, but how you can position yourself based on the probabilities and the risk in the current market. So let's start on the 4-year cycle. When will the next bull run start, and could the 4-year cycle become invalidated? Those are the 2 main questions we hear in the cryptocurrency space a lot, and those are the 2 questions we'll be answering in today's video. So let's start off with the bull run and the 4-year cycle. What are we looking at here, guys? If we take a look, this is our date range trend, the red zones being our bear markets, the gray zones being our consolidation or gradual uptrends between the bear market bottoms and bull run initiation, and then the green phase being our bull run phase. If we take a look at the date range, we can see we generally have around 16 to 17 bars in this consolidation phase. That means if we do see 16 to 17 bars, we can expect, based on historical day trends, for the bull run to initiate between March and April 2024. That is just but one variation. There are a few more things we look at when we're looking for bull runs. Number 2, we're looking for shifts in macro volume and macro volatility. We'll discuss that now. So if we take a look at the 4-year cycle and we take a look at the bull runs, we're looking for 3 particular things. Number 1 being the date range trend. Number 2 being a shift in overall volume, momentum, and volatility, therefore trend trajectory, and number 3 being breaks above certain particular horizontal levels of liquidity. If we take a look at our major lines on this chart, being our $30,000 resistance right over here, our horizontal resistance over here at 6,000, and our horizontal resistance over here at 450, we can see in the prior cycles, these levels held as bases of supports for extended periods of times, upwards of 1 year at some times. When these levels finally lost, we actually saw a cataclysmic crash in the markets, resulting in a new low for Bitcoin in all scenarios. Eventually, during this consolidation phase, we saw a daily trend reversal into a weekly trend reversal into a monthly trend reversal, which resulted in the price breaking a monthly candle above our horizontal solid trend line. Every single time we have seen a monthly candle break above that level, we have seen ultimately the price continue toward a retest of our dotted trend line. The dotted trend line is the high point of the dead cat bounce after the bull run top. It is the high point of the dead cat bounce after the bull run top. We saw a retest of that point over here. We saw a retest of this point over here. And finally, if we take a look at where that point is again, that is sitting at 48,000. Therefore, if we continue upwards on a macro scale, the next macro target for Bitcoin will be 48,000. I want to go into that a little bit more because there's 2 more things I want to discuss. But more importantly, let's take a look at the Gaussian channel. The Gaussian channel is a particularly phenomenal indicator when it comes to predicting macro trends, in particular the strength and direction of macro trends. And just moving back to the 4-year cycle, there is still one more thing I want to discuss about what the 4-year cycle needs to actually achieve before we get into a bull run, but we need to talk about this one first. So we look historically at the Gaussian channel. This is a weekly chart. Every single time we have broken above the weekly Gaussian channel, we have seen that corresponding month as well break above that major horizontal resistance. In fact, we have seen out of the last 2 times, 2 out of 2 scenarios where we break above that weekly Gaussian channel. And where do we head up to? We head up to retest that dotted trend line high, which is this point over here. That is that dotted trend line on the other chart. We retest it, we correct. If we go back to the prior cycle, we can see the same scenario. What happens? We break above on the weekly chart, we continue upwards, we retest that dotted trend line, which again is over here. Perfect, we retest that dotted trend line. If we had to say the same scenario would occur this time around, we break a weekly candle above, we have done that, we remain above, we continue upwards to retest 48K, which is this level over here, 46 to 48K, before we reject once more. That will be the scenario we're looking for if we continue as per what we have seen historically. We'll discuss the probabilities of that exactly when we get into the shorter time analysis and daily analysis in today's video. So moving back onto this chart, we can see we do have some technical confirmation that this scenario could play out once more as per what I just described in the Gaussian channel. But for the next part of the bull run, or for the bull run to really kick off, we need to see a monthly candle close above that dotted trend line. We can see a monthly candle close above the dotted trend line occurred here. A monthly candle close occurred here. This is the interesting thing. When we go ahead and classify what a bull run is, a bull run essentially is an extended period of increased volume and volatility in a market that results in an aggressive uptrend. So we take the trend angle between our bottom points to those breakout points, and then we take the trend angle from those breakout points to the high, the bull run highs. We can see a significant shift in that trend angle, whether it be here or here. We can see we increase around 15 to 30% in terms of trend degrees. That signifies a surge or a shift in volatility, volume, momentum, and velocity of price action. If we get positive metrics such as are described on a macro chart, that will classify us to be in an aggressive uptrend. An aggressive uptrend stronger than what you would consider a standard uptrend over a higher time frame is what we classify as a bull market. So for the bull market to start, we need to see, as described, number 1, a break over our horizontal trend line here. We have seen that. We need to see this level defend as support. Number 2, a monthly close over 48,000. And number 3, we need to see that occur around that date range trend. We need to see these 3 things occur for us to classify that we are in a bull run. Number 2, guys, I want to discuss. What are the probabilities of the 4-year cycle invalidating? And this is something a lot of people get caught up on. A lot of people say, oh, you're a Bitcoin maxi, you're a Bitcoin perma bear. People say, look at the 4-year cycle. The 4-year cycle is nothing more than a general guide. It is nothing you should be holding yourself arm and leg towards. It is a general guide. The 4-year cycle is just a date range trend. I'll show you. If we delete the 4-year cycle from this chart, guess what happens to the significant levels? The key levels of significance are still there. The 4-year cycle is nothing more than a general range, a date range trend in which certain moves are likely to occur in based on prior data. The key levels in which we need to break above, the key resistances, the key liquidity levels, the key trigger levels, the key levels we need to defend are still relevant regardless of when those levels break or occur. If we follow through the 4-year cycle, it tells us that this should occur before or on this date. If we don't see that occur before or on that date, we can say the 4-year cycle has failed. It doesn't mean the price is not going to enter a bull run. Another thing, for the price to invalidate the strength we are seeing here, we need to see something significant happen in the charts. We need to see something significant happen in the economy. To identify macro direction, we have to identify the overall macroeconomic risk because the market doesn't move by itself. The market moves based on market drivers. You have market drivers over here. These being economic, political, societal, social. It could be monetary policy. It could be taxation policy. It could be governmental policy. A whole bunch of different things can drive price. The main one really being interest rates, right? If interest rates fall, we generally see the cost of debt decrease and therefore asset prices increase. So we have drivers of price. Drivers of a price determine macro direction. If we're looking what the impact drivers have on price action, we look at price metrics. Price metrics being momentum, speed, velocity, volatility, all these different metrics of price action that determine price strength. Okay, and the price strength can be used in relation to a structural analysis to predict where the price is likely to go. But if we go backtrack over here all the way from the end to the start, we can see the main characteristics of what determines the direction of price are still these macro drivers. Therefore, for the macro direction to shift, we need to see a shift in the drivers of which are causing the price to go up in the first place. If the price is going up in the first place based on these drivers, it is not going to randomly turn around unless these drivers force it down. And therefore, for the price to invalidate the 4-year cycle, for the price to make a new low, for the market to crash, we need to see something significant occur. We need to see interest rates go back up. We need to see inflation start to move back up. We need to see a cataclysmic crash in a major infrastructure in the cryptocurrency space. Another exchange goes down. Cryptocurrency gets regulated beyond belief. All these things need to occur for the price to crash. The US dollar dropping, inflation rising is not enough. We need to see interest rates move up. We need to see the cost of debt rise. We need to see the overall perspective of cryptocurrency deteriorate. We need to see people scared. That will cause the price to go down. If everything remains how it is at the moment, with interest rates going back down to a potential pivot, with inflation potentially falling, even going back up eventually, but if interest rates remain low, asset prices will continue upwards. Asset prices will rise. I'm not saying that Bitcoin's going to go up forever, but what I am saying, if we want to see a significant shift in direction, not just a drop to 28k, but a significant shift in macro direction down below 15k, we need to see the overall macroeconomic environment that is driving these assets upwards shift. That could occur. It's hard to predict. We'll discuss when it does happen, if it does happen. Let's go ahead, guys, and discuss the smaller time frame price action. So there is a fair bit to talk about. But actually, before we do get into that, I want to talk about this over here. We can see that we are retesting a major resistance. This is going to be about $31,300 to $32,000 resistance. If we zoom outwards, and I'm going to go ahead and delete everything off the chart except this horizontal resistance, which I'll go ahead and quickly pop back in. Very rough. I hope that's adequate enough. We can zoom out. We can see that our next level of resistance on the chart is sitting right over here. We're seeing a resistance at around 38 to 40,000. This, of course, is going to be the VRPV bump up over here on that chart. This represents an area of mass orders, mass trading volume, and again, a historical order, a level of resistance. This is our next macro resistance. We can see the distance between 32,000 to 38,000, the VRPV gradually dives off. Okay, we have more VRPV, we have the VRP slightly increasing again after about 35,000, but generally it is quite low. This signifies an area of low historical trading resistance, or a low resistance range, however you want to call it, or a low volume range, or what you want to call it. It signifies a range of which the required volume is lower for the price to move upwards. If the required volume is lower for the price to move upwards, that increases volatility, that increases direction, and potentially shifts the price action aggressively upwards. We could potentially see this again, guys, like I've been saying. Even though the short term, we've been in this crazy horizontal consolidation, the probable direction right now on the higher time frame remains the same. We've been saying for a very, very long time, ever since 16.5k. We've been bullish ever since 16.5k. We told you right now, ever since we see these weekly indicators turn bullish, the probable direction is still upwards, guys. The short term can be bearish, the macro is still very, very bullish. That remains in fact. Let's take a look at this chart right over here, guys. This is actually a very relevant chart. I've gone ahead and annotated some of this stuff to make it simple and easier to follow around, and all these levels are still very, very valid. We had a horizontal consolidation here for about 25 days, brutal consolidation, a lot of chop, a lot of indecision, a lot of false flags. And I've been telling you guys during this phase over here, and I'll say it again, this phase was an area of indecision and an area of which you didn't want to aggressively position yourself on either ends of the spectrum. If you wanted to take short-term bearish trades and you wanted to see a crash occur, we had to see 29.8 to 30k lost. If we wanted to see the price continue upwards into the short-term resistance, potentially to 32,000, we had to see that resistance at 30,100 break. We have seen that. If we take a look at the measured move of this range, we take the distance between our 30,000 and our initial resistance, which is going to be 30,800. Our minor move is going to take us to 31,800. Our maximal move, if we take that distance from our 29.8 to 31,000, will take us to a potential range of 32,200 above the resistance. So as per the measured move of the horizontal consolidation, we have reached target 1. Target 2 has not been reached and may not be reached. It's very important to understand. We are now sitting in a horizontal, in a macro, high time frame horizontal resistance. It is likely to break above, but nothing is confirmed. Resistance is resistance until it is not, and therefore if you're looking for late longs here on Bitcoin, you're better off waiting a little bit longer to get above 32,000 first, or at least come back down, retest this area of support before we continue back upwards. Now, if we take a look at horizontal structures, there is always a chance this could be deviation, but we cannot assume it is deviation right now. You could hedge yourself in a position to assume it's deviation, but it is unlikely to be a deviation unless broken back down. If 31.3k is lost, even more so if 31k is lost, there's a very high chance we push back into the range and we continue back down to test the lower support of this horizontal consolidation. I would not be confirming a valid breakout of this level as of yet. This is very bullish, but in the back of your mind somewhere, you should be thinking, what if this breaks back down? How can I position myself and where will the price go? Prepare. As for right now, the bulls are definitely in control. It is hard to say for sure if this will be sustained, as it did break upwards on a news event, and news events can often be buy the rumor, sell the news type events, but we have to keep our mind on the short term. If we're looking for the bears to take control, we need to see the price break below 29.8k. If at some point we do still see that, remember, these horizontal levels can be dragged across. So if at some point, whether it be over here, whether it be all the way down over here, or later on, if that level is still lost, that level is still a area of liquidity. So if lost, we can expect a move down to our nearest support, which is 28.4. Do not expect this unless this level is lost. I've been saying the entire time, do not expect a significant crash to occur unless we lose this major area of support. This is a horizontal consolidation. It is a neutral pattern. The direction of break determines the direction of which the price goes, and therefore, right now, the best thing you can be doing is looking for altcoins or positions that have not moved upwards yet, that are breaking high time frame resistances with very, very low risk that you can take positions on in hopes that Bitcoin continues upwards. If you want to hedge yourself negative, take a short on Bitcoin, stops above 32,000, hedge toward the downside in preparation of this potentially being deviation. But there is absolutely no doubt right now on the charts, on the high time frame, that things aren't looking good. Just because things aren't looking good, it doesn't mean it's time to buy. Your entry should have already been, okay? Wait for the next opportunity above 32,000. Wait for this monthly candle close. Wait to see if we can validate and hold above 30,000. Remember guys, we need to still hold above 30,000. If this monthly candle closes below 30,000, it's not going to be a very good look for Bitcoin. We need to close this monthly candle above 30,000, hold above 30,000, okay? Let's go ahead really quickly and dive into the immediate short term for Bitcoin and discuss the next immediate move. So, if we take a look at yesterday's video really quickly, we saw a nice strong consolidation at the bottom of this phase. In fact, this was our range we're discussing right over here. We told you in yesterday's video, we saw a consolidation occurring and we did not expect a move toward the downside unless we lost our local low at 30,235. Losing that would have resulted in a move to 30,000. We said we expected a move upwards if we broke above 30,430. I think it was something like that. You can go watch yesterday's video to find out. Watch yesterday's video if you want to know the exact number. I can't exactly remember what the number was, but it was somewhere around this range. If we broke above this high, we would have continued upwards. We saw that. We continued very aggressively upwards. We are now challenging this resistance zone. Let's go ahead and bring up some technical indicators and figure out, how other charts are really looking on a smaller time frame. What are the charts suggesting and where could we be going next? We'll keep this one nice and quick and then we'll wrap up the video. So first and foremost, let's bring up a CVD and our RSI. Our CVD is suggesting weakness. We can see the overall cumulative volume delta has been falling. Again, this is an overall sign of weakness. Momentum is still trickling upwards, but again, if we zoom out to a higher time frame, we can see that we do have a little bit of weakness showing again on the CVD and on the RSI. It is not looking ideal for Bitcoin, but what trumps these technicals are horizontal levels. So while we remain above this level, regardless of what weakness we are seeing here or on here, the price can continue toward the upside. This now is a support. This area is a level of demand. A loss of this level will result in a continuation back toward the downside. Okay, so the technicals are suggesting initial weakness. It is normal to see the technicals suggest weakness after we have had a strong move upwards and then a move sideways. This will suggest weakness in the technicals. The lagging indicators will be suggesting weakness as we have compression after volatility. Don't take that at face value. Look at the horizontal support levels for the next move. I'll wrap it up there, guys. We ran out of time and I want to go over 25 minutes. Thanks for watching. I'll catch you guys in the next video. Cheers.